If you've been holding lots of US dollars, you might want to brace yourself. UBS, one of the world's top financial institutions, has dropped a significant advisory, warning investors that the US dollar is likely headed for more turbulence in the days ahead. You don't have a major commercial bank sounding the warning alarm for nothing. This is definitely something you want to pay attention to. Let's talk about it. All right, so I want to take a quick minute, share some thoughts in reference to a recent advisory that came out from UBS as of lately in reference to the status of the dollar when measured against other fiat currencies. And so clearly the world, as well as the currency traders, are recognizing something that's definitely got them on edge. And so this video here, we're going to dive a little bit deeper to really try to figure out what exactly it is that they're concerned about and why it should be important to you. Because over here in the Western Hemisphere, our entire world is centered around the Federal Reserve note, aka the dollar. And so when foreign nations, as well as other institutions, are concerned about the Federal Reserve note, it's definitely something that we should be aware of. And so if you're new to the channel, my name is Mike, and I try to put together these short form quick takes to keep you informed and up to date on what's really happening beyond the mainstream news, and hopefully one step ahead of the masses in protecting and preserving everything you work so hard for. So if you guys want to see more of these little quick takes, definitely hit the thumbs up button, drop a comment down below, let me know your thoughts or what you're keeping your eyes on, and then make sure to subscribe and click that bell notification. And so what exactly is going on here? And so it looks like from the US dollar index peaking at 106.5 on June 25th of this year, we've seen a gradual decline ever since then, to the point where now, as of today, it's at 101. And so based upon that downward trajectory right there, the greenback has already slipped about 5% since June. And according to the UBS Chief Investment Office, they think this downward trajectory is just beginning. So according to their recent report, they're forecasting a prolonged decline driven by two main forces: narrowing interest rate differentials and an escalating fiscal deficit here in the USA. So what's going on here? And that's why I want to break some of this down a little bit. So the US dollar's strength over the past few years has largely been propped up by one key factor: the interest rate gap between the US and other countries. So the Federal Reserve's aggressive rate hikes gave the dollar an edge, making it more attractive for investors chasing higher yields. But now that central banks worldwide are catching up, the advantage is eroding fast. And it appears that UBS believes that this narrowing gap is going to hit the dollar hard in the coming months. But that's only one part of the story. And so the US fiscal deficit, which as of this past August stands at $1.89 trillion, and this has definitely become somewhat of a hot topic for a lot of people. And it's about to become an even bigger problem. And so that's why UBS is sounding the alarm that the mounting national debt and ongoing political gridlock in this country could send the dollar into a deeper spiral. So not only do we have the looming government shutdown, that just further erodes confidence in our government's ability to get on the same page with how they're going to manage our fiscal deficits. And there's one thing we can always count on, no matter what. There is no such thing as a debt ceiling as long as they continue to expand the debt, because that's how the system operates. So one thing for sure is this number has to keep climbing higher. Therefore, more nations are becoming concerned with the fact that our spending is out of control. And it doesn't help that this upcoming election are expected to bring even more scrutiny to the deficit, potentially leading to policy shifts or market jitters that puts further downward pressure on our currency. So now if you have a significant chunk of your investments in US dollars, this is the moment to sit up and pay attention. Because in this article here, UBS is advising investors to reconsider their positions and look for ways to shield themselves from the dollar decline. And one of their recommendations is using currency hedges like futures or swaps, or opting for hedge share classes that cushion the impact. So essentially they're saying, don't sit around waiting for the storm to pass, prepare for it now. But that's not it. UBS is also recommending a pivot toward alternative currencies and assets. See, the Swiss franc is at the top of their list, given its reputation as a safe haven currency, and the Swiss National Bank's cautious approach to rate cuts. So with geopolitical tensions in all corners of the world, it appears that the franc is expected to hold steady, if not gain ground against the dollar. And along with that list as well, they list a couple other currencies that might end up reaping some of the benefits of the dollar's downward trajectory in the next couple of months. And of course, they do hint at the fact that gold is also a good hedge as well. And if you've been following the markets, you know that gold tends to shine when everything else looks very shaky. And so UBS expects this trend to continue as lower interest rates and global uncertainty make the precious metals sector a prime choice for diversification. In fact, they're recommending that investors allocate up to 5% of their USD-dominated portfolios to gold. And that's not something we're used to hearing about from commercial banks. So ultimately, what's the key takeaway here? UBS is clearly not optimistic about the US dollar's future. They're telling investors to diversify, hedge, and move a portion of their wealth into other currencies. And if you're still all in on the dollar, it might be a time to rethink that strategy. And if you need proof that the fact that since June 26th, the dollar has been suffering major pressure when valued in other assets such as gold, you see this steady decline right here. It looks a lot different for those that were holding gold at that same time. So here on the chart, you can see from the same time period of June 26th at the very bottom here till present time, as you can see over the last 2 months or so, where gold has gone relative to the dollar index. And so that, my friends, is a monetary reset. But anyway, just want to share some thoughts, let you know what some of the professionals are thinking and saying in their most recent reports here. And so when you have a Swiss bank coming out sharing some warnings on what they see coming, that's just something we're paying attention to. But as always, it'll do no good just to sound the warning bells, give you all this data, show you the charts, And I'll leave you with something to also consider as well. And that's why it's always a great opportunity to make sure you have some gold. So here we got the gold backs, which I personally am using for a wealth preservation tool. So if you guys are interested in getting your hands on 24 karat gold notes that are appreciated in value during the same time that the dollar has been on the decline, then you can go to buygoldnotes.com. Links in the description, and redeem some of these notes for real tangible wealth, which is gold. Anyway, just curious to hear your thoughts on this matter. Drop a comment down below if you found value here. Hit that thumbs up. Take a minute, share this so other people can find out what's going on out here, what the professionals are thinking, and I'll catch you guys later.